Three, two, one, we are live. Hello, everybody. Good afternoon, good afternoon. It's an amazing, amazing Monday here on Live with Leo at 5. We're 5 minutes after 5, and if it was Cinco de Mayo, we would be like celebrating right now. Good afternoon. It's an amazing. So I have Gucci Singh here. She is very special to me just because I love her personality. And, and she is a mortgage specialist and has been in the industry for many, many, many years. I have down here that she's been in for 30 years, and she works with all sorts of clients and realtors to help them make their dream of home ownerships come true. And so she's a big advocate for mental health awareness and hashtag break the stigma. She is involved in several charity foundations where she helps give back to the community, and she holds educational classes to educate the community on a regular basis. She truly believes that if you help enough people, you have helped yourself. So I'm going to let Gucci talk a little bit more about herself, although those are pretty great already. I'd love for her to talk about a little bit of her personal background, how she got into the industry and where she is, and what she loves about the industry. Go ahead.
Well, hello, everybody. I don't know which camera to look at because we have multiple ones going. So if I'm not giving you the eye contact, that's what's happening. But welcome to Monday. Happy Monday, everybody. Thank you so much for a great introduction. And it says a lot already, so I don't want to continue to brag. But yes, I did start working in this industry in 1987. I've seen the market go up. I've seen the market go down. And all of it, the whole since 1987 has been residential lending for me. I started out in the background of processing and then underwriting and then loan officer and management, back to being loan officer. And, you know, you just never stop being a loan officer. So in this industry, when I talk to people, they usually say, well, how do you know so much? Or teach me everything that you know. I feel like it's the hands-on experience is what makes the difference. The more transactions you close, the more you learn. And there's never two identical transactions, even though the borrower might be the same, but the transaction would be different. And the reason is because you have the borrower and then you have the collateral, and depending on the transaction, it makes a big difference. So throughout my 33 years of my career, I've learned a lot. I've met a lot of amazing people out there, clients and realtors and affiliates in the industry. So I truly love doing what I do. And I'm at a place in my life right now where I just love teaching people. And I truly believe that if you have helped enough people, you have helped yourself. And my mindset on a daily basis is, how can I help you? What can I do? I can help you. Where can I help you? And with that mindset, is just everything just flows. So, and when you say that to a client or a realtor or anybody, it's a good feeling for them. But they also are really open to telling you, well, here's what you can do to help me, or here's what I need. And it just opens up the dialect, and you just figure out where their needs are and you go help them, and then you go to the next, you know. So anyway.
It's rainbows and unicorns.
Right? So, justice, I think.
Yeah, you touched on something. You know, I do get a ton of people who are first-time home buyers. And so I can just put myself in their minds right now of like, well, I want to buy a home, but I don't even know where to start. And I think one of the things you touched on, that people have many different circumstances. And obviously that's one of them, but I think part of what a lot of people don't know is that, you know, for somebody like you, what you do on a daily basis, the type of transactions you do, okay, like you touched on, is that you're either purchasing a home, which has an asset attached to it, of course, and all the other ones do too, but as opposed to a refinance, which you already own the home, but you want to redo the loan to adjust either a payment or take some money out or put some more money in or something like that to restructure that loan. So those are the two big sides of mortgages. Am I correct?
That is correct. So The way we look at purchase transaction, you have multiple people that that you have to keep in mind, right? You've got the seller that's selling their property and they have to move on to the next home. And if they're purchasing, then they have to worry about that seller and so on and so forth. But then you also have your client, which is your buyer, that has a home that they have to either sell or move out of and a home that they have to buy. So on a purchase transaction, it's usually multiple transactions that you have to worry about, and you have to work around a lot of different people's schedule and timelines and everything else. And those generally industry-wide will get priority over refinance. And here's why. Refinance, you're already in a property, your dogs and your cats and your family and your kids, everybody's settled, you're good, you have a roof over your head, and you truly don't have a deadline. If you were to miss 1 day or 5 days, it doesn't matter, nobody is affected. Versus on a purchase, if you miss your deadline, you might have a seller that needs this money to buy the next home, or you might have a buyer that has to move out of the property that they're in because it's either the landlord kicking them out or the landlord needs the place or if they're selling it. So you have to keep that in mind. And then also they have to get the trucks to move, right? Moving trucks, the movers and all of a lot more things needs to be coordinated. So yes, the purchase transactions are treated differently than a refinance transaction, solely based on the timeline wise and prioritizing wise. We give priority to purchase versus a refinance. Do we look at the borrower's financials differently? Do we underwrite them differently? No, they're all based on the product type and the program type and all overall picture of the finances of the borrower. Every time you refinance a loan, you're refinancing to put them back into a new loan program. Therefore, they do have to requalify for that program. So we do look at their credit, we do look at their income, their asset, and the collateral. But as far as priority and which loan closes first, is purchase transactions take priority over refinances. Okay. Did that answer the question?
Yeah, absolutely,
okay.
Absolutely. I actually didn't know that there was a back-end operational priority that you guys are doing, which makes sense. But I want to touch on a couple of different things. So number one, the first-time home buyers, like talk to them. What should they know? I want to buy a home. I've never done it before. I don't know where to start. I know that I need to have a lot of money. I don't know what that is. I don't know what my credit score is. And so like, how do you talk to the first-time home buyers and say, okay, let's keep it simple for you. Let's do 1, 2, and 3.
So I usually do a lot of talking, not because I talk a lot, but I just, when you talk to somebody and you're asking the question, it really, you're really getting to know them, what their needs and their wants are, but it also gives me a really good idea of what direction we need to take. So a lot of times my first question is this your very first time talking to a lender? When was the last time you spoke with a lender? Tell me a little bit about what your goal is. What are you trying to do? What's your current situation? Are you living with your mom and dad? Are you living in an apartment? Are you living with your fiance? Where are you at? What is your monthly rent right now? And then what's your goal? Where do you want to be? And a lot of times first-time home buyers are like, I don't know. And a lot of times I have first-time home buyers that'll say, well, I'm paying $1,800 a month in rent right now, but I want to buy and keep my payments at $1,500. That's when we have a really heart-to-heart conversation on, okay, well, keep in mind, anytime you buy, when you're renting, you're just paying the rent. When you're buying, you have mortgage, principal, interest, property taxes, homeowners insurance, HOA, if it's a condo or a planned unit development, right? Homeowners association fee. So we kind of touch that. We go over the details of what that is and what that means when you're owning a home versus when you're renting. And then from there, I usually ask a question. What is a comfortable monthly mortgage payment for you? If they say my comfortable monthly mortgage payment is $2,100, I usually say that means you should be able to go up to $2,500. Here's why. You have property taxes, you have homeowners insurance, you have all this. Remember, talk to your CPA. I'm not an accountant or a CPA to give you any advice, but when you become a homeowner, there are certain benefits of home ownership. And if you were to go and file your taxes after owning a home for a whole year, you will see there's a benefit to it. And this is why you should be comfortably able to go up to that. But then you also want to look at your income to see if you qualify for that, right? So the way, after I'm done talking to them, we're able to determine how much do they qualify for, what is their monthly mortgage payments going to be, including tax, insurance, and all other expenses of a home only, that does not include utility bills, and how much money will they need out of their pocket to buy this home. So it's a lengthy conversation. Within 10 to 15 minutes, we're able to come up with an estimate and a roundabout figure with them. And then from there, we kind of do a reverse calculation and bring it back to what is comfortable for them. Just because they qualify for $1 million based on the income that they have doesn't mean they want to spend the $1 million, right? So I will do, okay, what is your income? What is your FICO score? And I'll say, okay, based on what you're telling me with all your debts and everything, here's what you qualify for, and this is what your payment's going to be. Oh, wow, that payment is too high. What is a comfortable payment? Then we back it up and go, okay, maybe you want to stay in $500,000 range so that your payment could be in the range that you want it to be. With that being said, this is how much money you're going to need for down payment, with closing costs and everything. This is what you're going to need. Now you know, here's what's the sales price range I'm looking at. This is what my payment's going to be. This is how much money I need to save up. Everything's correct and right and feels good. And that's when they go out with the realtor and start looking for a home in that price range. What will generally happen is they'll go out there, and let's stick with the $500,000 range. They'll go out there and they'll start looking at homes in the $500,000 range. They'll start falling in love with a home of $525,000 or $530,000. I always set them up and tell them and give them a $10,000 increment on what happens to your monthly payment for every extra $10,000 that you spend. That's what your payment's going to be. And then also, you know, here's what you need as far as closing costs and everything else. So they have a really good idea. I also tell them this is where you're going to stop. When you hit 550, let's say in this case, you don't want to go over that. So they have that buffer that they can go out. But when they have that, they feel really confident. When you're going out without having your numbers in place and you start falling in love with these homes out there, the first question that comes up for a first-time home buyer is like, well, what would be my payment? It's almost like walking onto a car lot and going, well, I want to buy that BMW, but I really can't have my car payment anything more than $400 a month, you know? So it's usually they want to know, what would $400 a month buy me? And sometimes you'll be like, get off the BMW lot, you got to go to the next lot over, you know, because your monthly payment is not for this lot, you got to go to the next lot. So same thing with home buying. I mean, not same thing, but as far as monthly payment wise, a lot of people worry about their monthly cash flow more than what can I afford. On paper, I might afford $10,000 a month, but really I don't want a house to own me. I want to own a house. I want to have that extra money to be able to have the parties or go on vacation and do what I want to do. So
yeah, that's a great point with the car analogy, you know, because people might go on a lot and they might want to buy a $75,000 car, but I think what I encounter most is that they don't know, you know, what they can afford, number one, and what do they want to pay,
right,
within that affordability. So what's really great is, I think, you know, having that 15-minute conversation with you can like literally clear all that stuff up, you know. And so they can go out, like you said, they can start going out and finding out like, okay, I know where my range is, because like a lot of people think, well, I can only afford $500,000. Well, how do you know? They go, well, I don't know, I just guess, you know. So so I think sometimes they can afford more, sometimes they can afford less. You just want to know from this conversation of that 15 minutes. I always say, hey, it's free, it's no obligations, have a conversation, you know, then you know what you can or cannot do. And then once you get pre-qualified, you're basically ready to say, this is the one I want, let's go.
Right. And all this can be done over the phone.
Yeah.
Or on a video conference.
You
know, right? Do anything you want. But yeah, all this can, 99% of my clients, I do it right over the phone.
Yeah.
We have that conversation, husband and wife get on a conference call or on a speaker phone, and we just talk.
Yeah.
You know, it's a home buying process can be very stressful because we're talking about multiple things. Everything is personal, right? We're talking about people's homes. We're talking about people's money. We're talking about people's family. So we understand that it's very stressful. And we also understand that we get very nosy with your business, right? And I usually tell, look, by the time I'm done, I'm going to know a lot about you. We get very nosy because we're you're borrowing a large amount, 500,000, million, 2 million, whatever, we go up to 20 million. So depending on what you're borrowing, we're going to ask a lot of questions, and we try to be sensitive to that. And we are also understanding that when I'm asking, a lot of times it's underwriters will come back and they say, you don't have enough asset, or you don't have enough income, or your credit is this. That's like personal, so we have to be sensitive to that when we're talking to them.
As in your position as well as mine, we all have confidentiality,
Yes.
Agreements and with our clients, that we're not divulging those things. We are using that information to help you.
Right.
And so the more that we know, the more leverage, the more leverage, and the more that we can help you understand what you can or cannot do. Because if you leave some stuff out, that could be a critical piece of information to help you through your loan process.
And as a loan officer on our end, on the privacy side of it, we can't even divulge any of your personal information to the realtor, even though he or she is part of the transaction, unless the borrower signs a release in writing saying, you have my permission to give information to my realtor, Leo Chen. Right. I mean, they have to say that. Otherwise, we keep it super confidential. And then the thing with me is I will close the deal and it erases out of my brain and I move on to the next transaction. I don't even remember any of it. And I'll have my clients call me up, remember we had, and I'm like, okay, I really have to go into my memory bank and we have to pull up the file so I can go back and look at it. And I do that on purpose. I don't need to remember people's personal stuff,
And
so because we work with so much.
Yeah, when you've done hundreds over the years, like you just want it out of your head so you can get to the next one.
Right.
Empty your brain, make space for it and stuff like that.
Decompress.
Yeah, exactly. So I did want to talk a little bit about a difference between first-time home buyers coming in. In some ways, they're a little bit simpler because they're coming in one way. They're buying one home. They're not going from selling one home to another home and swapping and timing and all these different pieces and stuff like that. And that could be a conversation for another time. But I think most importantly is just knowing about what's going on right now with the mortgage rates, with the loans, as a result of the pandemic, the COVID-19, and how it has progressed in the last, let's say, month. And is it getting better? Are things starting to get sorted out? Or what should people know, who are thinking about selling the home, getting into a bigger one, or first-time home buyers, or somebody who's refinancing?
So what we've noticed on the purchase side of it, that buyers are still active and they're wanting to buy. We do pre-approvals all day long. Everybody's excited. People are ready to buy. I think what's holding them back is the whole virus. Is it safe for us to be able to go into people's homes? Is it safe for me to be out there and stuff like that? As far as lending guidelines, we did tighten guidelines a little bit. So for example, first-time home buyers on a FHA loan, the FICO score, we were able to go down to 580 FICO score. And back end debt to income ratio, we were able to go up to 56.9. And give funds, were allowed and all of that. We, as of April, we now have 620 minimum FICO credit score and 50% debt to income ratio. That's all of your debt. That's your car payment, your credit card, your student loans, and all of that, plus the new mortgage that you're going to have. We can only go up to 50%. So if you make $10,000, your overall debt can only be at $5,000. That's on an FHA loan. Now, if you're looking at a conventional loan, guidelines are more stricter. So FICO credit score has to be over 700 in some cases. It really depends. It's product per product. The conventional Fannie and Freddie, we're still able to go down to 620 FICO. It depends on the type of loan. The loan size makes a difference because you have your first time conventional loan limit, then you have your high balance limit, and then you have your jumbo limit. So we did pull in with the FICO score, income, and asset part of it. Okay. But we're still closing a lot of them. And honestly, a lot of people below 620 weren't coming in buying anyway. When they came in with below 620 FICO score, they had so many other variables that was wrong with them that we would generally have to bring them up to 620 and kind of massage it a little bit before we were able to actually do the loan. So we really didn't lose a lot of client base.
Okay. Well, I think it's a great point that, there's a lot of different situations. People are different in their price points and their income and all that kind of stuff. But I do have a question for you on one of my clients. He wants to buy a first-time home here locally in Orange County. He currently is in another state and he works in another state, but he's relocating that down here to California. Now, we had done a little bit of evaluation with another loan officer before, and he was trying to get an FHA low down payment, 3 to 5% down. And he was told that he could not qualify for 500 based on his income as well. But it's very difficult for him to qualify because he works in another state. So can you talk through that a little bit? Because if he's not—
I don't know why my cough is coming in. I apologize for that. But okay, so if you're transferring from state to state, we just need the offer letter that shows the transfer, or a transfer letter, whatever your company is going to provide. So I'll give you an example of a real life transaction. I had a client that worked for Home Depot in Texas, and he moved to Corona. And he came out here with his family, checked out the property, made an offer, and moved back. We needed a transfer letter from Home Depot saying that he was transferring effective dates such and such. So as long as we have a letter from Human Resources saying that it's an intercompany transfer and they're relocating to another state, we can use that income to qualify.
Okay, so if it's not technically a transfer, but he's still employed at the same company, as long as we have documentation to show that he is with the same company, that he has that same income that he's being qualified for, then it's fine, right?
And it's going to continue when he moves over here, right? Right. And a lot of time with today's environment, I mean, especially right now, everybody's telecommuting. So we would have to be able to justify, well, can your main office still be whatever state he's in, and still he can telecommute from here? And if that's justified, then we're good. We just need to see that their income's going to stay the same or more and continue for the next 3 years. 3 years is the key here. Is your income going to continue for 3 more years? If it does, then we can use that income to qualify you.
So you're looking back 1 to 2 years, and then you're looking forward
3 years.
Okay. Yeah. Okay. Hey, for those of you who are, I know there's a few of you on, and a few people popping in and out. And if you're watching live, feel free to ask any questions. If you have something on your mind, I'll be watching the chats, and we can get it out to Gucci if you have some financing questions. Otherwise, if you're watching this on a replay, feel free to ask the question, because we'll get Gucci back to, maybe respond to you, or, get you connected. Yeah. So generally, the pullback wasn't so severe. What about people who are self-employed? We're getting more and more of these self-employed people who want to buy a home. What is your recommendation to them, and how can they get past this qualifying issue?
File your tax returns. So if you're looking to purchase currently, now remember, pre-COVID, which was February, we had bank statement programs and profit and loss statements where you could go in with 10% down, and we would use your bank statement, average out your deposit, and use that as an income. That warehouse line across the board, all of them have stopped. Some of them are doing it, but they're requiring 40% down, and they're, high FICO scores. Is it possible? Yes. A lot of times when people are coming in that scenario, they don't have 40% down, or, the FICO score isn't there or anything like that. So currently, as it stands, and I can only talk about right now, and that could change, we want 2-year tax returns. So if you haven't filed your 19, we would want your 17 and 18 tax returns, 2019 profit and loss statement, unaudited, so you can create it. It doesn't have to be done by a CPA, and the year-to-date P&L statement. So another thing that they're looking for is, are you currently making that same income that you were making in January and February? And the way to verify that is through invoices and checks that are coming in, and they literally want to see that in order to see that your income has not dropped by 25%.
So will you be able to do in that scenario, a statement loan that's a jumbo?
Yeah,
No.
no, we can't do bank statement loan.
Well, a statement loan, they're self-employed, but then also on top of that, it's a jumbo loan.
Yeah, we can do that. Same rule, 30% down.
Okay.
Jumbo loans require 30% down and 725 before.
Okay.
There is like no exception to that. So if we're talking jumbo loans, 2-year tax returns, 30% down, 12 months in reserves. And we want to make sure if you're self-employed, well, in this case, you are self-employed, we want to see 6 months of operating expense on your business. So your business account has to have reserves for 6 months on operating. Your personal account needs to show 12 months of mortgage payment. So if you own multiple properties, it's all the mortgages, 12 months per property.
So you just have to be a lot more qualified. You have to have a lot more on reserve to do that kind of loan where you're, basically showing income from either your own self-employed, or you are like a company, a corporation,
Right.
that you show profit and loss on that.
Right.
Okay.
So there's LLC, there's corporation, there's S corp, different types of tax returns that are filed, and depending on how you file it and how you flow your cash, all your cash flow, if it goes through K1, we look at all of that and we want to see all of your tax returns. We want to see all of the schedules, your business and your personal. We want to see how it flows, and the underwriter goes in and dissects it all. Some of it we're able to use, some of it that you write off we're not able to use. Some things that you do write off we are able to add back in, and it's not the same for everybody. But best thing I can suggest, if you're looking to buy, even if you're moving up or moving down or buying an investment property right now, talk to a loan officer, submit your application with your income and your asset. Let that loan officer dissect everything, package it, put it together in front of an underwriter. Let the underwriter go through it and review everything, and they can give you this thing called fully underwritten loan approval. What the underwriter is saying, the borrower is good. We've reviewed your income, we've reviewed your asset, we know what type of loan you're looking for, here's the price range you applied for, here's the maximum that you qualify for. They sign it off. Then you can actually go out and look at homes and know that the underwriter is not going to have any questions on your income or asset or anything. So you can, go out and buy in confidence and make those offers and actually, go in escrow. Because a lot of times what happens is they'll want to go look at, buyers get excited. They want to go look at homes. The signs are out. They want to run in. I just want to look. They'll go in just to look, and all of a sudden it's the perfect house for you. Now you're like, I want to make an offer. I want to make an offer tonight. And everybody's excited. Now you're trying to find your loan officer. And if it's this time on a Friday, loan officer can get on the phone, but they're still not going to be able to issue a loan approval to you for you to be able to make that offer.
Yeah.
So get your money lined up first.
Yeah, I mean, I can't stress that enough, and I think you brought up a great point about being underwritten to the point where it's not quite approved yet. And so you have, traditionally we have, your pre-qualification, which is like the least amount of qualification you can have to even make an offer on a home. And then you have now more commonly, well, pre-qualification used to be common. Now it's pre-approval is the most common now. And now I'm suggesting everybody, if they can, to just go ahead and get a conditional, pre-approval, which is what you were talking about. Do you guys have another term for that?
Same thing.
Everybody.
So, everybody wants to use a different, I mean, a lot of people are like, we need the DU, we need the DU. Okay, I'm going to, full disclaimer, I'm a sarcastic person. So, and I said sarcasm will kill me one day. There's been times where I'm like, do you know what DU is? If you can tell me what a DU is, I will give you $5. I'll give you $50 if you can tell me what DU is. So a lot of people focus on DU, okay, which is direct underwriting. What is a direct underwriting? Direct underwriting is an automatic system that we use to underwrite the loan. Direct underwriting system goes in, pulls the credit report, and then takes what we enter into the loan application, which is income and asset. I can make it up. Leo has $2 million. Leo makes $50,000 a month. There is no way for the computer to verify those things. The only thing the computer is able to verify is your credit report, right? So, and that's important because the credit depth, how long you've had your credit, how well you maintain your credit, do you borrow and pay back on time? Do you owe too much? Do you owe too little? All of that is important. But the DU goes in, takes the credit information, and then only takes what I push into the system. And based on that, it comes back and gives me an approval. Can I manipulate that? Yes. All day long, I can manipulate that. So a lot of people focus on the DU. DU is not something that you want to. So you have a pre-qualification letter. I literally can type on a Word doc saying, Leo says his FICO is 740. Based on the information he told me, he qualifies for $800,000. He's saying he's going to put $200,000 down. I haven't looked at his bank statement yet. I don't know if it's there or not, but here's a letter. That's a pre-qualification letter. It's based verbally on just talking and issued, right? DU is, I pulled the credit report. Leo says he makes 50,000. Leo says he has $2 million in his bank account. So based on that, here's the DU. The third is the underwritten loan approval, where Leo says he makes 50,000. He verified it with his tax returns, paycheck stub, W-2, whatever. Leo says he has 2 million, and I've seen his 2 months bank statements, and the money is there. The underwriter's gone through it and dissected it, looked at it and said, okay, good, we will give it to you. Once the underwriter signs that off, they won't renege unless your situation changes. So let's say you go out and start looking at home, and God forbid you lose your job, or you've used up your money. I've had people go to Vegas and use their money, or something changes, or you stop making your mortgage payment or your car payment. That's happened too. Or they've gone out and bought a, Range Rover, which you shouldn't do. So once we approve you, don't change your income, asset, and credit. And that's the third one, is the one that you really want, where the underwriter goes in and underwrites. Underwriting turn times are 24 to 36 hours. It's not that long. It's the process can totally take maybe 5 days, 2 days of borrowers giving you everything, gathering, because sometimes we ask or not, they don't have it handy, right? So they have to go look for it in between trying to do their job. And so once they get it to us, we package it. Everything's totally paperless, electronic. Doesn't take us that long to click. 2 hours for me to put it all together, push it into underwriting. There are 24 to 36 hours in underwriting. We have a fully approved loan approval. Having patience for 3 to 5 days to really get a fully underwritten loan approval will save you so much headache and heartache in the future.
Yeah, I think a lot of the, especially first-time home buyers who have never gone through it, had never been denied at the end, or had been, like you said, house first, they're looking. They put it in an offer, pre-qualification, all that stuff. There's, they're feeling happy. They do some inspection, pay a little money for it, but the loan hasn't been totally ready to go and being, to the point where it's going to be able to fund. And they get to the end and like, oh, sorry, we actually can't approve you. The underwriter said we have a problem with this or the other. Sometimes they can move some gift money here and there and make it work. Mm-hmm. But that heartbreak, I mean, I lose sleep over it, because it's so heartbreaking. You have to go through that whole process and have all this up and down emotions and the shopping and thinking about, where you're going to put your couch, where you're going to, whose bedroom is going to be this one and that one, and then to be, denied. It's heartbreaking. So we're always trying to do what we're talking about is getting people to that point where they have the smooth process of that, and they know what they can afford, they know what they qualify for, they know that everything has been verified, and they're ready to go when they find that home. And make an offer and get it accepted. We know that you can get it, for the most part, very high percentage instead of a low percentage.
I have a really sad story. To me, it's sad only because I live this, right? I live it, I love it, all of it. So when I see something go wrong and it was like, but it could have been prevented, it really makes me sad. So in February, realtor goes and puts an offer in $1.8 million without a pre-approval, comes to us, we get the loan approved, lock it, 21 days into it, we're approved. We're getting conditions that we have appraisal. We paid for the appraisal as a lender, got the appraisal, and we're ready. 21 days into it, the buyer had walked into one of the major banks, was chatting with the personal banker over there. That banker talked him into switching. I'm sure the agent tried to tell him you can't switch lenders at day 21, but it was 1/4% better interest rate. So they switched, and we're like, are you sure? Because I'm looking at your finances. I'm telling you, it's going to be complicated. You're a jumbo loan. We need these puzzles to stay where it needs to be. No, a couple $100 a month is going to make a big difference. We're like, you shouldn't really change lenders this far into the transaction. This is February. They go off. We hold on as long as we can. Then the regulation, ECOA, Equal Opportunity Act, they require that after so long of files sitting dormant, we've got to like have some kind of disposition and either cancel it off the system, approve it, whatever we need to do. So we're like, all right, well, borrowers have 100% sure they're going to go with lender, leave. Okay, we cancel it. The day we cancel it, 2 days later, borrowers come back. They're like, okay, I got declined over there. Well, guess what? It was March 12th. When did we go in lockdown?
I think it was
And
March.
what do you think happened to all the lenders with all the guidelines? So this buyer went in with no loan approval. Then in between, they wavered back and forth. And it was over 1/8 or 1/4% of an interest rate. It wasn't that big of a difference in the interest rate. We're now here today, and I spent an hour today trying to help this loan officer with this loan. We can't do the loan because COVID took over and new guidelines kicked in. We had a fully approved loan with an appraisal and everything in February. We were ready to close. We were in day 21. 9 more days, we would have closed that loan. They switched lenders. That lender had to move money around between business account and personal account. We're talking $500,000 because they were moving money around so they can get a better interest rate. What they didn't understand is when you start moving money around like that, underwriters don't like it when you're going from business to personal and you're commingling your money. When all that happened and they got declined and they came over here, we had to untangle that. And even with all that, there's not enough reserves and there's not enough cash flow in the business. Yeah. That wasn't a requirement in February. Remember that.
Yeah.
So
that's a super great story. I have a question here I do want to ask you, but I wanted to just respond to that real quick. You know, this quote that is always ringing in my mind for many reasons, but it fits the situation because it's like this. You are focused on all the pennies and you miss out on all the dollars. So you missed the loan, you can't get qualified because you were staring at the pennies that you're trying to save. And the long-term asset of what you gain from the value of the home is those are the dollars. Owning a home, being free and ready to go, move in, start paying your mortgage, earning that principal, all that stuff down the road, that's like dollars and hundreds of dollars and equity and things like that. And yet you are looking at the pennies. Mm-hmm. So take to heart for people out there, because it's really easy to do. And decision at the end of the day is yours, but those are very hard lessons to learn.
So this one, they actually live literally on the same street. So they'll be staring at this potential house they could have owned.
Gosh.
I know, I feel so sad. We're still gonna try to save it. I come up with answers middle of the night. Like I'll wake up and I'll be like, oh wait, why don't we move this puzzle piece from here to there? And then I've solved a lot of problems in my sleep. So I'm really hoping I'll pray before I go to bed and see if I can come up with a solution for these buyers. I would love to see them get into a home, but let's just, goes back to it. Let's get fully approved loan from an underwriter. And when an underwriter has approved your loan, try not to go away from the underwriter to a different underwriter or a different company. That's all I have to say. Because you have the approval,
Yeah.
You can always refinance, right?
Yeah, it is not a problem. Those points, so many people focus on those tiny little percentages and like, oh, it'll be $100 difference. And this and that. But in the
I
long
also have clients that are usually negotiating interest rate at a pre-approval stage. I'm like, do you have a house? I can quote you whatever you want. It's not going to matter until you actually have a house, you know? But that's all the education process. We have to educate.
and then you're not locked in and things are changing and all
Right.
that kind of stuff. So it's just it's a waste of time, unfortunately.
But it's all education. It's, I mean, look, if I was to walk into a wine bar, well, no, actually, that's not a good example because I do know my wine. But if I was to go into a business where that wasn't my specialty, and you know, I wouldn't know what questions to ask or the process or the flow. So it becomes, that's why I love educating, because it's my job to show you and tell you, you want these ducks in row here before you go out and buy more ducks. You know what I mean? Or before you buy whatever you need to buy to put the ducks in. So
yeah.
anyway.
Okay. So question here. I'll just read it word for word. Would it be possible to get a loan if you are currently unemployed due to COVID?
So when you say you're currently unemployed, are you furloughed or do you have a job to go back to?
She didn't say, but
Okay.
you can maybe cover either.
So here's how we're looking at that. And, you know, over 24 million people are unemployed right now. I think we're hitting 30 million. So, and that's one of our biggest challenge right now in our lending industry, because what we do is we do a verification of employment with your human resources. I'm drawing loan documents after the loan is approved, and then we do another verification of employment to make sure you're still employed before we send the wire out, right, when we fund the loan. So I have clients in the beginning stages, my 15 minutes of a conversation. Sometimes it's only 5 minutes. It doesn't always have to be 15 minutes. It's 15 minutes when you're buying, it's 5 minutes when you're refinancing because you've had some experience, right? But that initial interview, I'm asking you, are you currently working? Are you working from home? All those questions, right? How are you being paid? If your company's still paying and you are returning back to work, we're able to use that income and they're still paying you. You're just not working. But if you truly are not getting any type of income and you don't have a return back to work date, then we have to wait till you go back to work and see the first paycheck showing that you have the full hours, especially if you're hourly, to be able to fund that loan. We'll approve the loan. We can even doc the loan, meaning get the loan docs out. We will not fund the loan until we have the first paycheck showing that you have returned back to work. Did that answer the question?
Yeah, I think it does. And I think a lot of people also file for unemployment, you know, because we're 30 million, you know, unemployed, and a lot of people are filing. And so, so until you start getting your paychecks that you're working again, then we can start considering a purchase.
But here's the thing, if you're really in the market to buy it, I believe in being proactive. Start, even if it's a year from now, start the conversation now. This is the time. You're sitting at home, you're thinking, well, I have organized all my closets and drawers and everything else. What can I do? Well, I'm thinking about buying, whether it's in 6 months or 6 years from now. You've got to start the conversation. This is a great time to start the conversation. We can have this conversation over the phone or via Skype or whatever you want to do, not in person yet, and then set you up. Talk about your credit, talk about your income, talk about your asset, talk about different programs. Talk about what area would you like to move? Okay, you'd like to move in Irvine area. Do you know what the going market price is in that area? Start having conversations. Let's get Leo involved. Leo, what kind of homes in the price range in Irvine area are we looking at? Oh, it's that. Okay, you know, so start those conversations, because the more you start talking about it, the more real it becomes, right? So if you say you want to buy a BMW, we'll stick with that. I personally drive Audi, but BMW, and you're like, one day I'd like to own a BMW. What kind? Why? You know, whatever it might be. All of a sudden, you'll start seeing those cars out there in the street. So if you're thinking about buying, your first step is to talk to a loan officer.
Yeah.
And you want to start having these conversations. Well, I'm not working right now. I'm on unemployment. Okay, great. But what were you doing before and what would you go back to? Okay, so assuming your income is going to stay the same, let's try and work off of that. Your current debt is this, your income is this. When you return back, and guys, we're going to return soon here. It's not going to be that long. As long people are thinking it's going to be a long time, it's not. And honestly, we're probably going to have a tiny little dip in the market, but it's going to go right back. We're going to bounce back so fast you're not even going to realize. I mean, you're going to look back and go, whoa, what happened? You know, right now we're in the middle of a storm. So it seems like, oh my gosh, we're never going to get out of it. We are going to get out of it. And in real estate market, I posted something on my Facebook today. We're not going to see drop in value. So for anybody that thinks, oh, the REOs are coming back, short sales are coming back, most likely it's not happening. Property values are not, you're not going to be going in and buying 100,000 below market. We're going to see a little dip and we're going to go back right into it. So start the conversation now, get on the phone. We are not like, oh, you have a property, let's do a loan kind of loan officers. Loan officers talk about short-term and long-term goals with you. Are you looking to buy today, 6 months from now, 6 years from now? It doesn't matter what your goal is. We put you on a path. We connect you with the right people so that you can achieve your goal whenever that might be.
Yeah, I think those are all super great advice. I think it's a little misleading for people because in the housing market, people go on Zillow, they go on Redfin, they go on Trulia, whatever. They see all this information, they see the prices and all that stuff, and they think they know everything. They know, oh, this is what this should go for, and this is what that should go for, and this is my price and all that stuff. But what they don't realize is what we get, you know, same goes with mortgage officers too, is that we get so much more information than just what's being shown to the public on the surface. We see historical stuff. We see stuff that's on hold. We see stuff that's coming up. We see what things are selling for, because the stuff that's sold, you don't get to see what it actually sold for on the internet. It gets pulled off. And so I think a lot of people mislead that there's a lot of information out there with thinking that they know all the information's out there. So same thing like you, one phone call, 15 minutes. What are you looking for? What areas? What do you think your budget is? And we can pull together a report for you in literally minutes, just because our tools are so good to show you like, okay, here's what it is. And we're happy to just take 5-10 minutes and walk you through it, how this is being analyzed and how we can show you the prices of homes and we can nail down exactly. I mean, there's so many different variables: condo, single family, you know, multi-units, whatever, you know. So I think it's misleading to think that they know that, oh, what things should go for. And then secondarily, regarding the market, it's bad. Don't get me wrong. You know, a lot of people going unemployed, it's not good. There's going to be a dip in the economy. I'm just getting ready to send out a report just on that, just to get people updated on Monday. If you guys want a report, just go to leosvip.com. Just a single one-click button, and I'll get you the report, no problem. But literally, you have dips in all these other industries, with the restaurants, with the sporting events, with all kinds of things that require people to gather and stuff like that. Those are hurting really bad. But it really did not touch real estate. Real estate just basically put on a pause and like, hey, we're not selling right now, but we still have our homes. Our equities are still there. The prices have not dipped, you know. And so as far as real estate is concerned, it's held steady. And when we come out of it, it'll return to normal. So don't get us wrong. Like if we say, hey, you know, things are going to go back to normal, just doesn't mean everything's going to go back to normal. But real estate wise, all the values and everything are still there. People still have their homes. And so when people start going back to work and they can start paying the mortgage back again, they can keep their homes. That's what we're looking for. Now, if a lot of people start losing their homes, then we'll start seeing some effects on real estate in general. So there's two different things at play, and real estate has been very stable. It actually is one of the things that's holding up the economy, because people have so much equity over the last 10, 12 years since the big recession. You know, so keep in mind, real estate is still doing really well. We're still working really hard to help people. There's still people initially that needed to move because they're already in transition, they're already invested, and then need to move, because if they don't move, they lose a lot of money or whatever situations they have. And I think those things are over the last 30, 60 days have been kind of been sorted out for a lot of people. So congratulations to them. They were moved to where they need to move. Technology's been great, it's taking care of them. But over the last week, I think what you were saying was accurate, is we're starting to already see people like, hey, I'm still working, I'm working remotely, I'm still getting my income, everything's all right. We're starting to see the curve flatten out. We're tired of being home. We want to get out. We want to start producing. We were looking at homes. And so now we want to start looking again. What does it take for us to get into homes, to shown homes and all that kind of stuff. So we're already seeing a shift this month in May where people are like, hey, we're going to get back into it. So hopefully that helps everybody, as far as like, hey, where we are, in the real estate market for the general public.
I want to add two things. One of the things that I always say, and that's like my blanketed disclosure, I'm not a realtor and I never give real estate advice. One thing I do see on my end though, because contracts come through our desk and we see people purchasing, so we know, and when you've been doing it for so long, you see everything. Two things. One, in Southern California, they are not making any more land. Therefore, the demand, everybody wants to live in Southern California. We're running out of land, so the demand is there. So supply and demand will always keep the property value holding high. So Orange County and even Inland Empire, San Diego, LA County, you guys know what the value is. And with that being said, if you go back and look at the history of Orange County, even through the actual mortgage meltdown, Orange County held strong compared to all other counties around there. So keep that in mind, that we are not making any more land there for, we're used up all of the land out there. So home values, that's one reason why it'll hold. The other part that I want to share, another story, I was actually on vacation. This is a really long-term client of mine that called me up. I was in Hawaii. Hey, Gucci, I found a house. Can you do a loan for me? Yes, I can, because I've done loans for him before. I mean, I knew I didn't have to say, let me run everything to qualify you. I knew he was going to qualify. $1,000,008. I start the file while I was on vacation, got it started. I come back from Hawaii and I'm sitting there and I'm working on it, and I'm seeing the tone of the client, the realtor that they're working with. As I'm seeing the emails go back and forth, and the fact that he was pushing the contingency removal and there was like no exception to anything, I was like, hold on, let me go back and look at the purchase contract. And I texted my client, I'm like, did you use the listing agent? He's like, yeah, he gave me a deal. So long story short, he regretted it. I'll tell you that. Long story short, he used the listing agent to represent him. Things went south, middle of the transaction. The seller had all kinds of stuff happening, and the buyer basically went unrepresented. Because if I take you to court, Leo, and you hire my attorney to represent you, whose side do you think the attorney is going to take when things are not, you're trying to win this thing. So when you're out there and if you think that, oh, I'm just going to use the listing agent to represent me because they're going to give me a good deal. First of all, he didn't get any good deals. Second of all, when things were not going great, he had no representation, because the listing agent's first obligation was the seller, right? Because that's who he told the seller, I'm going to get you the best price, the highest and the best price. I'm going to get you 14-day rent back. And I'm going to get you this and I'm going to get you that. In the end, my buyer had to stay somewhere else because the seller was delayed on his up leg and did a 14-day rent back. And my buyer had to store his stuff somewhere and pay for storage. It was $1,500. The 14-day rent back, he had to go stay somewhere else in a hotel himself, and all kinds of stuff. And also he had to remove $60,000 loan earnest money deposit because the listing agent said you had to remove it.
Yeah.
So please just make sure, if you're a buyer, does it cost a buyer to have a realtor represent them?
No, because you have to, it's already in the listing contract as how much it was going to pay the buyer's agent and the seller's agent. It's already set up. It's almost like if you're a buyer, you go to Nordstrom's, you buy a really nice pair of shoes. Well, did you pay the sales person? Did you pay for the rack and the display and the store. Well, you paid for all that with the money that you spend on the shoes. Same thing. It's kind of transparent to you, okay,
Yeah.
as buyers. So same kind of thing. So
It's
yeah,
not the sales price. The seller is technically the seller is paying for it, right?
right. Well, you can go, you can think about it either way, but it's coming out of the proceeds. But then you're the one that's getting the loan for the full amount of the purchase of the property. So it's coming out of that, that you paid. So so you could say it either way, but at the end of the day, you're paying for it.
Yeah.
And so you're at the end of the day, if you look at it from the buyer's side, then you're paying it from the as a buyer because it's part of the, let's just say it's $500,000. It's part of the 5% or 6% that's written in the contract. You don't get to decide how much that is, but you get to pay it.
Right. So as a buyer, by using the listing agent, you're not saving any money, and you're not getting the best deal out there. You're still going to get the best deal, whether you bring in your own agent to represent you or you're using the listing.
Right.
It's
Because
always good to have an agent on your side looking out for your best interest and making sure not removing contingencies when you're not supposed to, making sure all the other stuff is done before you remove the loan contingency and all of that, because you got to protect your money.
yeah, I think the biggest pitfall is that you can use a seller's agent as your agent when you're purchasing. Now, what happens behind the scenes, the communication between that agent and the seller, and what they're saving, what they're positioning, what they're negotiating in the back end, and they would position you on a less priority, of a position, and you might close the transaction. You might not have any issues, and you might think it's great and all that stuff, but you might have left $50,000 on the table, $100,000 on the table. You would have never known it because that agent is not going to tell you. They're not going to tell you that, hey, you could have gotten more.
Right.
Because they have a responsibility to the sellers, and that's their priority. So what happens is that you think that it went great, you bought a home and all that stuff, you walk away, and well, until somebody points it out to you, you would never know that you left a lot of money on the table. And
Yep.
so that's the biggest problem I see. And a lot of people do it because they think that, oh, it's an easier transaction. I'm dealing with one agent, it's doing both and all that stuff. But when it's all said and done, you don't know if you gotten taken advantage or not. Maybe you did, maybe you didn't. Okay, there was no way to know, right? So that's that. I think that's a huge problem. Like you might walk into and not even know it. It's like
Right.
you paid extra $100 on the $200 shoes, and you would never know.
Right. Yeah.
Good,
So I just want to point, I see all kinds of stuff that comes through. A lot of times we don't point it out because I'm not going to make you feel bad. You already made that decision, and then they'll start asking me and I can't advise them, and that's why I said, go to your agent because I can't give you real estate advice, well, he's the listing agent. Okay, well, go to your agent because I can't give you the advice.
Yeah.
Call his broker. I don't know what to tell you, so.
Yeah, totally. I'm glad you brought that up. So
Yeah.
great topics. Thank you so much.
You're welcome.
Talked
We
about
could talk for hours. I mean, this topic
Right.
just is a never-ending topic, right? On financing. So, but yeah, anytime anybody, if they have questions, they can plug away. We'll come back and answer that for you. But if you are looking to buy or if you're looking to refinance, talk to a reputable loan officer, whoever that you trust. Every realtor has a team that they've built, that they trust, that they've done business with. The best thing that you can do is work with the team that they've done, a trusted lender, and make sure the lender's asking the right questions and you ask the right questions. And if you feel they're not asking questions, to make sure that it's a benefit to you, because one of the things that we look at is this a benefit to the borrower that are borrowing the money? If your lender is not using the right words, where it seems like that they care about you and they're looking to make sure it's a benefit to you, interview another loan officer. Nothing wrong with that.
There's lots of people who will happily do a great, honest job, just like
Yes.
you.
Yes.
to make sure that they get everything they need, and they get to make the decision
Right.
based on the information. And we're just here to give you as much information and educate you about what that information means. And then you could interpret it, and then you could decide
Right.
what's best for you at the end of the day. So loan officers, realtors, same thing. So just find one that you like, that you feel communicate well with you, can understand your situation, give you everything you need.
Yes.
So absolutely, there's a ton of stuff we can go over. I'm just gonna have you on a regular basis and cover things. But the COVID thing, definitely, we want to make sure people know and understand, what the situation is. So you covered
Yeah.
that really well.
The
So
COVID thing is temporary, you guys. If you're looking to refi, looking to buy, start the conversation now. You're going to come out of it within 30 days, or 60 days, or even it's 90 days. You'll have everything lined up and ready to go when we're ready to go back to work. So.
absolutely, I can show you numbers that since the COVID, since the shutdown, all that stuff, every single day we're closing escrows, we're going into escrows, things are being sold, people are putting their homes on the market. I put out a report that just this last 2 weeks, 7% of homes come on the market. So people are feeling more comfortable. It's coming on the market. You get to shop if you're a buyer. You get to sell if you're a seller. Things are still moving. Everything is 100% operational. It's not like a restaurant where you can't sit down at the table anymore. We can do everything virtually. There's no germs being passed around. So
right.
We're all good in real estate. So I encourage everybody, like you said, do the planning, get the consultation, see where you are. If it's the right time, it's the right time. If it's not the right time, then we can project, hey, what is it 6 months from now or a year from now? What do you expect to do, so that we can maximize your buying power and get you, a better lifestyle, better neighborhood, better school for your kids, whatever, right?
Yeah.
Yeah, so, okay, super great. We talked about some first-time homebuyer stuff. We talked about some complications with multiple transactions, multiple legs. We've certainly gone over some COVID stuff, which I personally appreciate. I always like to hear from the lender side, and just some really, really good advice. So appreciate all that stuff. So anybody, all of you guys watching, afterwards on the replay, just go ahead and submit any questions we have, and we'll answer them as best as we can. Again, I'm going to try to have her back. There'll be lots of other fun stories to talk about. I'm here at, just so you guys know, when you guys are watching here for the first time, I'm here 5 o'clock every Monday through Friday with the new guests. And I'm going to just give you as much as possible with some of these expertise. We've done a lot of people in the health industry. We've done this week we have 2 musicians coming on.
Oh,
So
wow.
yeah, so they're gonna be just talk about their lives and their art, and maybe play some music for us. So tune in when you can, Monday through Friday, 5 o'clock, Live with Leo. Thank you, Gucci. How can everybody get a hold of you? What's the best way to communicate and reach out to you?
So I'm on all social media, Gucci Singh, right? On all of the portals and platforms that you can find me on. You can always call me on my cell phone at 949-307-2292. You could always email me at gucci@citywidehomeloans.com. My first name at citywidehomeloans.com. My website is www.guccisingh.com. That'll take you directly to my website. It's a Citywide Home Loans website, and you can apply online, look at programs and products and everything else. Best way to find me on Facebook, Instagram, LinkedIn, or somewhere, and inbox me, and you'll be able to.
Awesome. As per our tradition, Gucci has a quote for us, and I want her to just
Well,
everybody.
We already started out in the beginning. If you've helped enough people, you've helped yourself. And I say that, and my team hears me say that on a daily basis, because we truly believe in helping people, right? But as far as what I believe, I feel like that everybody should be the best version of themselves. So we should be always striving to be the best version of yourself at all times. And so one of the things that I'm doing during quarantine, what are you doing to make yourself be a better version of yourself.
Excellent, excellent advice. I think we all have the time to do that, whether it's spending more time with your kids or family or learning a new skill.
Reading, I'm learning a new language. So,
Wow, what language?
well, so there's a new app and it's free. It's called Duolingo. You can download it and you can commit 5 minutes a day or 30 minutes a day, whatever you commit to it, and it pops up and reminds you, and it tells you good job if you do it. I'm learning Spanish. It makes sense to be in Southern California, right? But you can learn Italian, French, or whatever. So when I'm done with my Spanish and I'm going to be fluent at it, I'm going to learn French because I was going back and forth from French and Spanish. French is more sexy, Spanish is more practical. And I'm like, okay, if I'm trying to be a better version of me, I should be able to communicate with more people locally. And when's the next time I'm going to go to France? Not anytime soon with the whole band. So I thought, okay, well, let me learn Spanish. And I have a lot of Spanish friends that I can practice on.
Yeah, I'm going to have to maybe send you my Spanish-speaking clients.
Not right now. We have people on my team. My assistant speaks Spanish. Two of my assistants speak Spanish. So we have that. I am not there yet, but I will. I love a challenge. So
awesome. Great. Well, thank you very much.
This was great. It was fun.
Yeah, it is. We can talk, like you said, we can talk for hours.
Yes.
Okay. Well, thank you very much. And thank you all for watching. And I will see you guys tomorrow. Bye, Gucci.
Yes. Bye, guys.